Okay, so let's get started on chapter 16. First, we're going to review some of the PowerPoint. We won't be able to do all of it. So let's look at the PowerPoint for 16. So we are going to be looking at cost, volume, profit analysis. In doing cost, volume, profit analysis, we are going to be using the behavioral or contribution format of the income statement. So we want to determine using CVP, that's the common abbreviation for cost, volume, profit analysis, using CVP, how many units or sales dollars must be created to break even. We're going to define that in a minute. How many units or sales dollars are needed to earn a specific profit. We will not be doing problems with multi-product setting. We will be looking at the graph, a CVP graph, and how changing the variables affect the CVP analysis. Okay, so break-even point is an important point for management. That is where you have zero profit. The meaning of zero profit is your sales revenue equals all of your costs, both variable and fixed. Nobody wants to operate below break-even. If you're below break-even, then you are showing a loss. Okay, we have two ways of doing it. I really don't think there are two different ways, but every book calls it two different ways. One is operating income and one is contribution margin approach. So the first thing you have to do is separate your cost into variable and fixed components. Variable cost, by definition, variable cost per unit does not change with changes in activity. Fixed cost in total do not change with changes in activity. If you had a mixed cost, you would have to separate any mixed cost into variable and fixed portions. Okay, we are looking at the company as a whole. We're not looking at individual divisions. So to do CVP analysis, we have 5 different variables. P is your selling price per unit. V is the variable cost per unit. Direct materials, direct labor, variable overhead, and fixed overhead. I mean, variable selling and admin. These 3 are product cost. This one is considered a period cost. Most students make mistakes on CVP analysis because they forget that direct materials and direct labor are variable costs. Okay, now Q is the number of units sold. We will assume units produced equals units sold when we're doing CVP analysis. F is your total fixed cost. You have your fixed overhead, which is a product cost, and your fixed selling and admin, which is a period cost. Z is the variable that's used for your target profit or before tax profit. When we talk about after tax, we're going to add 2 more variables to these 5. Okay, so variable product cost per unit, direct materials plus direct labor plus variable overhead. Variable cost per unit, direct materials plus direct labor plus variable overhead plus variable selling and admin. Variable selling and admin is a variable cost, but it's a period cost, not product. Contribution margin per unit, the abbreviation selling price per unit minus the variable cost per unit, the calculation for it. Contribution margin ratio can be expressed on a per unit basis or a dollar basis. So on a per unit basis, it's contribution margin per unit divided by selling price per unit. On a dollar basis, it is sales revenue minus variable cost, which is contribution margin in dollars on that behavioral format income statement divided by sales dollars. So we're using the contribution margin based income statement that was explained to you in the review for chapter 3. When we talk about operating income, we're talking about before taxes. Okay, bottom line net income is after taxes. So the behavioral format of that income statement, which is not here, sales revenue. You take sales revenue minus variable expenses equals contribution margin. Sales revenue minus variable expenses equals contribution margin. From that, you subtract fixed expenses, and that equals your operating income, which is income before taxes. From operating income, subtract income taxes to get your bottom line net income. Okay, so the units required for a target profit. You're going to take your fixed cost plus your before tax income and divide by contribution margin per unit. Price minus variable cost per unit is contribution margin per unit. Okay. Break even means this target profit is 0. So they're simply taking the target income off and say it's fixed cost divided by the contribution margin per unit. I just remember that this is the formula for solving for units needed, and that target income is 0 at break even. Okay. So we have a few more minutes. So here are selling price is $400, direct materials $80, direct labor $1.25, variable overhead $15, fixed costs that are overhead $800,000, variable selling is a commission of 5%, fixed selling and administrative is $400,000. Okay, so you need to divide your cost into variable and fixed to prepare the contribution format income statement. Units sold, we solved for break even by using the formula. 7,500 units times selling price of 400 gives us sales revenue minus variable expenses equals a contribution margin in dollars minus fixed expenses. For fixed expenses, we added both fixed overhead and fixed selling and admin. So the fixed expenses equals the contribution margin when you have a 0 profit. So at break even, and this is a common multiple choice question, at break even, your fixed expenses equals your contribution margin. Okay. So if we wanted to transfer that into a profit of dollars, how many units are needed for 240,000 profit? Not break even this time, but a profit. Target profit, which was 0 for break even, is now put in as 240,000. You need 9,000 units to earn $240,000. Okay. So the contribution margin approach, it's simply fixed cost for break even divided by unit contribution margin. Well, selling price minus variable price per unit equals contribution margin. So I really don't think it's a different. It's just they're calling this contribution margin instead of giving you the formula for contribution margin. Okay. So the variable cost ratio is variable costs divided by sales dollars. Okay. So sales revenue is 100% minus variable cost ratio equals the contribution margin ratio, which is the contribution margin in dollars divided by sales dollars. So this is what they're calling the contribution margin ratio. Using the contribution margin ratio, if you want sales in dollars rather than in sales units, we're going to take fixed costs plus operating income divided by contribution margin ratio. That's when we want to solve for sales dollars. Okay, so let me stop there. And we're going to go to the PowerPoint. Not the PowerPoint, we're going to go to the problem shells for chapter 16. Okay, here are the 5 variables, definitions, brief exercise 16.1. Calculate the variable product cost per unit. Variable product cost or direct materials of $575 plus direct labor of $1.25 plus variable overhead of 60 cents plus variable selling and admin 80 cents. Okay, so that gives you your variable. Oh, no, we don't want 80 cents yet. Your variable product cost of $7.60. Okay, then we're going to add the variable selling of 80 cents. So this is going to be $5.75, $1.25.60, and that's going to be $8.40. Okay. Then contribution margin per unit, the selling price we said was $16 each. So 16 minus your variable cost of $8.40 gives you a contribution margin per unit of $7.60. Contribution margin percentage P of 16 minus V of 840 divided by P of $16 equals 0.475. Okay. Fixed overhead, fixed total fixed cost, fixed overhead of 43,000 plus fixed selling and admin of 19. Gives you 62,000. Then they want to prepare an income statement for the year. Okay. They said we are going to sell 12,000. So you're going to multiply sales units times that cost per unit. So 16 for revenue. Direct labor is 575. Direct materials. Direct labor is $1.25. Variable overhead was 0.60. Variable selling and admin is 0.80. So this is not a general journal form. This is a report form where I have two columns. Detail goes in the inside column, subtotals on the outside column. So this one is 192,000. I'm going in here, so I'm going to have to put a dollar sign again. This is 69,000. This one is 15,000. Variable overhead ends up being 7,200. Variable selling and admin is 9,600. You have to have a subtotal when you have multiple accounts. I'm putting the subtotal right here. Okay. So I don't need a separate row when I'm putting it in the next column. So that's $100,800, giving us a contribution margin of 91,200. Then I'm subtracting the two fixed expenses. Am I on the right row? I think this was 43,000. That one was 19,000. That totals 62,000. So our bottom line net income is 31,200. Okay. Then, if selling expenses increased, product costs have no change. Total variable cost increases. Contribution margin decreases. So contribution margin ratio decreases. Total fixed costs do not change. Okay. You can plug those numbers in. So this is the contribution format income statement we just did. This is writing left to right instead of top to bottom. Q is common to both of these first numbers, so I'm pulling it out because I want every one of the 5 variables by itself. So this is what I refer to as the basic CVP formula You can use this formula to solve 90 to 95% of the problems. This basic CVP formula. Okay, so I want to do one exercise. Brief exercise 16.2. So calculate the sales commissions, selling price, $68. No, where's the selling price? $320. Times the commission of 5%, so 0.05 equals 16. Oops, I forgot the equal sign. Okay. Variable cost per unit. Direct materials is 68 plus direct labor of 40 plus variable overhead of 12 plus variable selling of 16 equals 136. Okay. So contribution margin per unit, selling price, $320. It should be dollars there, not thousands. 320 minus 136 gives you 184. Now, whenever I can in working problems, I'm going to write out the costs that are part of variable cost per unit to keep reminding you to add direct materials and direct labor. Direct materials and direct labor are variable cost. Students leave those off when they're working problems because they don't have the word variable in front of it. So be very, very careful when you are working problems that you know there are 4 possible variable costs. Okay, so P was 320. V was 136. F 500,000 plus 116,400. $600 equals 616,400. How many units must they sell to break even? Okay, so plug the numbers into this formula. 320 minus 136 times Q minus 616,400 equals 0. The reason I use this formula is because you're not always solving for Q. Sometimes you might be solving for what selling price is needed. It's a lot easier to solve for P when you're using the formula in this format. Okay, so 184Q is equal to 616,400. So Q is equal to 616,400 400 divided by 184. And I got 5,162. Whoops, I didn't want to go up there. Okay. Now, if it asks for sales revenue, we've already solved for Q, so we can simply multiply by P, which is 320. So 320 times 5,162 equals in dollars. Somebody have a number for me? Anybody? Is anybody there?
1,651,840.
Okay. Or you can use this format. Okay. Contribution margin percentage is contribution margin of 320 minus 136 divided by 320. And what does that give you?
.575. Oh, yeah, 0.575.
Okay. So I can use this formula. PQ is equal to 0 plus 616,400 divided by 0.575. And what does that equal? Hopefully the same thing. Is it the same thing?
I didn't get that.
I didn't get the same thing either.
Is this one correct? Is this correct? Is 5162 correct?
Yes, 320 times
No, it's not.
5,162. Oh,
This one's not correct. That's what the problem is. What is that?
3350.
How much?
I got 3350.
Okay.
and then that gives us the other answer.
Okay. And so what is this?
1,072,000.
Even?
Yes.
Okay. So when I'm doing homework, I would do it both ways to check myself. Okay. So I just wanted to introduce chapter 16. We have a lot more to cover. We will not have class on Monday. I have a meeting I have to go to on Monday. So we will be taping the lecture Monday evening, and it should be available on Tuesday afternoon sometime. Wednesday is our review for the final next week. Okay. So Wednesday is the review for the final. I have made available the problems we worked in chapter 10. They should be available at 4 o'clock this afternoon. The answers to the problem shells for chapter 10. So you can go back and review that. Chapter 10 and chapter 9 homework are both due this weekend. So you do have the answers to chapter 9 and chapter 10 problem shells on Blackboard, in case you need to go back and work them again, or you need assistance when you're doing the homework problems. Okay. So that's it for today. All of you, please stay safe, stay healthy, and I will see you on Wednesday. Wednesday is the review for the exam. By Tuesday afternoon, you should have the PowerPoint, not the PowerPoint, the recording from Monday night available. So have a great rest of the week. Take care, everyone. Stay safe, stay healthy.